Okay, we don't want to record it yet though. So stop recording. So good afternoon, everyone. Thanks so much for joining us today to talk about one of our favorite topics here at Municipal Affairs, which is tax recovery. Not the most glamorous topic, but critical to the sustainability of municipalities nonetheless. I hope everything is going well wherever you're joining us from. I'm Angela Bilski, and I've been a municipal training advisor here at Municipal Affairs for over 7 years now. And with me today, I have Lucien Inspector Cloutier, who will be helping out with your questions and making sure the session goes smoothly from a technical perspective. And maybe Lucien will find a way to share his special brand of humor sometimes during this next hour and a half. So handouts were sent out in an email yesterday. And I've put the link to those handouts in the chat function in case you didn't get them in an email. So in those handouts is the slides, obviously, and then there are some larger versions of some of the timeline slides that I'm going to be talking about today. And a few activities to print out if you're interested in testing your own understanding of the timelines and the other topics I'm going to get into. And there's also a 2-page table that you can fill out as I discuss the 3 different tax recovery methods and highlight the similarities and differences between each. So here's just a little overview of what I'm going to cover today. So the primary goal today is to give you the tools you need in order to prepare for the start of the next tax recovery cycle, and to ensure you meet the requirements so that everything goes smoothly, all affected property owners are treated equitably and fairly, and the risk of any costly challenges to your processes is minimized. So first I'll discuss the legislation that governs municipalities with respect to tax recovery, because of course we are all about the legislation here. And then I'll get into processes involved with the 3 different methods. So a bit of a warning up front for those of you that may not regularly work with tax recovery. I'm going to get into almost a painful amount of detail about these processes, not because I want to inflict pain on anybody, but because all of these details are critical to meeting the legislative requirements involved. And not meeting these requirements could have costly consequences. So you're welcome to ask any questions using the chat function as we go, but depending on the nature and the volume of questions we get, we may have to address them at the very end of the session. Lucien's going to try to answer them as we go, but we'll see how we'll play that by ear. And we also welcome you to share any tidbits about practical solutions that to challenges you probably have in common with people in this webinar. So these sessions also provide a learning experience for us advisors as well. So we value your contributions and participation as we go through the material. Any questions so far? Everything's clear as mud? All right, so first of all, talking about the legislation. So the purpose and intent of your favorite legislation and ours, the Municipal Government Act, or MGA for short, is to provide for the operation of local government in Alberta. It provides a significant amount of municipal autonomy and flexibility, and realizes that one size does not fit all when it comes to the 340-ish municipalities in this province, with vast differences in size, type, location, and population demographics. However, provisions related to tax recovery are probably some of the most prescriptive or rigid of the Act, which is why this session will focus heavily on process. The MGA has certainly undergone a number of amendments over the last few years, and there has been a bit of change to the tax recovery provisions relating to the 2021 reinstatement of special liens for linear property, machinery, and equipment, or M&E for short. So I won't be getting into a lot of detail about these changes today, as this is more of a basic level session, but I will mention them a bit later on. So municipalities rely on the collection of property taxes to provide services, to improve and replace their infrastructure, and to meet their financial obligations. And of course, the government of Alberta recognizes municipalities' reliance on property tax revenue. To ensure that everyone who is required to pay municipal property tax does so, and everyone just loves to do it, we often hear, the MGA establishes a process to ensure that a municipality can collect taxes that are due. However, land or property represents a significant, if not the largest, investment for most Albertans. Accordingly, the MGA also contains provisions that protect the property interests of Albertans, including appropriate notification requirements and time periods to make payment, which some people might think are overly generous, but I guess that's a question of perspective. So this is a legislated process. It is a must in the Act and provides very little flexibility to modify any of the provisions, unlike other areas of the Act where there's relatively more discretion in certain situations. It's something that has to be carried out and likely does not leave many tax clerks with warm fuzzies while doing so, especially in smaller communities. So there are 3 methods for tax recovery in Alberta that are provided for in Part 10 of the MGA, and each one has its own division. So the first one is tax recovery related to land, which is covered in Division 8 and those sections that are on the slide. So this is the most common method used. It's specific to titled land, which may or may not have improvements on the property. And the process for tax recovery related to land can take up to 4 years. Then we have tax recovery related to designated manufactured homes, or DMHs for short, and that's provided for in Division 8.1. This method is used for DMHs situated in mobile home parks or where the owner of the DMH does not own the land on which it is situated. So that's an important distinction to keep in mind. This only applies to if there's different ownership of the land and of the actual home. This process can be completed in 3 or 4 years, and I'll talk about that difference a little bit later on. Then there's tax recovery not related to land, covered off in Division 9. This method can also be used for DMHs and should be used for business taxes, crown lease land, and some non-residential properties like linear and machinery and equipment. And this method can be completed in less than 1 year and is completely different than the other 2. It is the least used, however, it is becoming more commonly applied in rural municipalities for machinery and equipment. So it's important to understand the types of properties that qualify under each method. So as we go through these, please do not hesitate to ask your questions using the chat. Oh, okay. Another thing, I'm going to ask Lucian to put up the link to our Guide to Tax Recovery resource, which is found on our Municipal Resource Handbook website. So for those of you who haven't accessed this resource before, I have the link on the resources slide at the end, but hopefully Lucian can put the link in the chat if you want to refer to that as well. All right, if there's no questions so far, we will go into the first method, which is tax recovery related to land. All right, so when it comes to this division, as well as designated manufactured homes especially, it's important to know the difference between current taxes and taxes that are in arrears, as that's critical to understanding and applying the tax recovery provisions throughout the whole process. So what are current taxes? Simply put, they are taxes levied in the current year. So per section 334 in the MGA, taxes are considered imposed on January 1st of each year, regardless of when your municipality sends out its notices or applies penalties. Each municipality can determine its own due date for its taxes based on its tax penalty bylaw. Some counties or MDs have a fall due date to consider the time when farmers have cash coming in from selling their crops, But I'm going to use an example more typically of a municipality that makes their taxes due on June 30th by imposing a penalty on July 1st. If someone doesn't pay their taxes within the 6 months after July 1st, after the July 1st penalty is imposed, those taxes would be considered unpaid. And more penalties may be getting added, but they are still considered current, as it is still within the year in which the taxes were imposed. All right, so as for arrears, Section 326 defines tax arrears as taxes that remain unpaid after December 31st of the year in which they are imposed. So regardless of when they are due in individual municipalities, taxes not paid by January 1st of the next year are considered arrears in all municipalities and may also have a penalty imposed on that balance. So this definition of tax arrears applies to the tax recovery process for land under Division 8, as well as for DMHs under Division 8.1. However, Division 9, which deals with recovering taxes not related to land, defines tax arrears differently for the purposes of tax recovery. But we'll get into that a little bit later on. So now I'm going to discuss the timelines involved in creating the arrears list. And it's really taking me quite a while to get my head totally wrapped around this concept, but I found that drawing out the timelines makes it easier to understand, so I hope you will find this slide helpful for your understanding also. So the first step is determining if the property is far enough into arrears to be added to the list. And the legislative direction to prepare the tax arrears list by March 31st annually is found in Section 412. For tax recovery related to land in Division 8, properties make it onto this list if they are more than 1 year in arrears. Essentially, what this is saying is that any properties that are 2 years in arrears must be put on the arrears list. So for this next cycle, beginning on April 1st of 2024, properties that have any or all of the 2022 taxes plus the 2023 taxes owing must be put on the arrears list. A simple rule of thumb in this is this question. Since the taxes were imposed on this property, have they seen January 1st twice? If the answer is yes, then it is added to the arrears list. So on this diagram, 2022 is considered year 1 and 2023 is considered year 2. The taxes on these properties will have seen January 1st twice and must go on to the list. However, one very important thing to note is that anyone who comes in to pay at least 1 year's of arrears on or before March 31st of 2024 no longer qualifies to be on the arrears list. But as soon as the tax notification is registered, which is deemed to be April 1st, then all the arrears need to be paid to have that notification removed. There will be a time lag here for owners that come in to pay up their accounts the day the list is between the day the list is put in the mail for the Land Titles Office and April 1st. Okay, how can municipalities encourage people to come in and pay their arrears to avoid being put on the list? So what we recommend prior to developing the tax arrears list, a municipality may want to consider sending a letter to each affected property owner. In late January to mid-February is usually a good time to send out that letter. So what this letter will say is that the owner is that their property is going to have a tax recovery notification placed on the title, and that they can avoid this action from occurring by paying the outstanding amount of taxes that have been in arrears for more than 1 year, which for 2024 would be the 2022 taxes. This is because taxes must be in arrears for more than 1 year before the tax recovery process is started. If the property owner pays the taxes that have been in arrears for more than 1 year, like I've shown on the slide, a little bit too early, but year 1 would fall off this timeline and the property would no longer qualify for the arrears list. 2023 would then become year 1, and 2024 would be year 2. Potentially to be added to the list in March of 2025 if the owner doesn't make those payments going forward. Some municipal staff have told me that owners are too crafty and will just pay the amount they need to in order to stay off the list to avoid auction, but I call that being savvy when it comes to understanding how that legislation works. All right, hopefully that's helpful for everyone's understanding. If you have any questions, again, just pop them up in the chat. So let's continue to discuss the timelines, assuming the arrears remain unpaid. Section 415 says that all tax arrears must be paid by the following March 31st in order to stop the auction process. The amount that someone will have to pay is going to change during the time periods that follow throughout this process. So when the payment is made will determine the balance the owner has to pay to avoid auction. So this first slide here shows for 2024, all owners already on the arrears list that come in to pay off their balance after March 31st, say on April 15th, will then need to pay the 2022 and 2023 taxes before they can be removed from the auction list. If an owner doesn't come in to pay until after December 31st of 2024, for example, on March 1st of 2025, they will also have to pay the taxes imposed for 3 years, those years being 22, 23, and 24. The earliest date the municipality can schedule the auction would be April 1st of 2025, so payment before this date would stop the process. And if the auction isn't scheduled until December 31st of 2025, but by March 31st of 2026, which is still within the legislative timelines, an owner will now have to pay all 4 years of arrears in order to avoid having their property go up for auction. In this example, the municipality has scheduled the auction for February 1st, 2026. If the owner comes in to pay right before the auction, say on January 31st, they would have to pay all 4 years of arrears. So that's certainly a lot to absorb, but hopefully it's making some sense for everyone. And like I had said, the handouts include full-page versions of these last 4 slides. I see there is a question about penalties. So does someone have to pay the penalty that is due in January to get the tax notification removed? So Lucian has answered that if it's imposed in January, it would become part of the current taxes for that year. But I guess it might depend on your system. If your system can apply the penalty back to the year in which the penalty applies to. So some systems can and some can't, but under the Act, the penalties become part of the taxes due in that year. Right. Depends how your accrual system works. That's exactly right. So hopefully that answers that. All right, so let's continue to discuss the preparation of the arrears list and what happens after that. So when the list is completed, a designated officer, in most cases would be the CAO, must sign it and apply the municipal seal. So just to note that land titles still requires the list to be sealed, even though any reference to a seal has been removed from the MGA. Now that your list is sealed and signed, what do you do with it? Signed, sealed, and of course delivered. And some of you might be familiar with the song that kind of has that lyrics, but maybe not. So 2 copies of the arrears list must be sent to the registrar of the land titles office. And once the list is received, the registrar places a notification on the certificate of title for the property shown on the list. Other common terms for notification we sometimes hear are caveat or lien, but the term used in the MGA is a tax recovery notification. This legally registers the municipality's interest in the property. And the only way that the notification can be removed is if the municipality receives payment of the arrears and then requests that it be removed. Or sometimes a council, if they consider it equitable, can write off arrears, which would also remove the notification, but that's something that we don't recommend to be used in too many cases. The municipality must also post the list in a place that is accessible to the public during regular business hours. I've heard that sometimes people like to rip the list down off the wall. So some municipalities have put that list under glass so that that doesn't happen. According to section 412, the municipality is also required to send one copy of the list to the Ministry of Treasury, Board and Finance for the unclaimed property program. We sometimes hear that this step gets overlooked, but it's actually still a requirement. And if you are interested in learning more about the program, you can read a little bit more about it in our tax recovery guide. An important thing to note is that the arrears list needs to be postmarked prior to April 1st when it is received by the Land Titles Office. If it is sent late, then the notifications will not be placed on the properties in time, and it's going to set the municipality back an entire year in the whole process. Again, anyone who comes in to pay at least 1 year of arrears on or before March 31st no longer qualifies to be on the list. But as soon as that notification is registered, then all arrears need to be paid to have the notification removed. So the municipality here is required to notify the persons who are liable to pay the taxes that the list has been prepared and sent to the registrar. This letter should be sent at the same time that the arrears list is submitted to Land Titles. On the right-hand side of the slide are a few other provisions to be aware of. And the first one is about the costs. So the registrar certifies one copy of the arrears list and returns it to the municipality along with an invoice. So these registration costs can be passed on to the property owner per sections 413 and 553. By August 1st, the Registrar of Land Titles must also send a notice to the owners on the list, as well as any parties with interest or encumbrance on the certificate of title, that if the tax arrears are not paid in full by March 31st of the following year, the property will be put up for auction and the municipality may own it if it is not sold. Section 414 addresses the improvements on a property, and it says that once the notifications are registered, no improvements can be removed. So the notification letter that you've sent out earlier must or should make a mention of that section. Section 416 is available to municipalities if they know that a property is being rented out and they want to collect the rent from the renter in order to apply it to the outstanding arrears. So they must notify the owner 14 days before the notice is sent to the renter to pay the rent to the municipality. And this has varying degrees of success from what we hear when we do training out in the field, but that section does give the authority to collect rent. And then tax agreements under 418. So a municipality may enter into a tax agreement with the owner of a property at any time prior to the public auction to pay off the arrears over a period of up to 3 years. And while section 418 sets out some general parameters with respect to the timeline of that agreement, a municipality should really have a policy in place that sets out more specifically when and under what circumstances an agreement will be considered. And a policy always or tries to ensure consistent treatment of all owners in arrears. If the municipality is willing to allow for this option, perhaps this can be included in the notification letter as well. And an agreement ends when the term has expired or when it is breached by an owner missing a scheduled payment. There are no provisions for second chances if a payment is missed, or third or fourth or even fifth chances that we sometimes get asked about. If the agreement is breached, the tax recovery process resumes where it left off, and your agreement should specifically state this. And I've mentioned this section a few times already, but just to reiterate, Section 415 states all tax arrears must be paid by the following March 31st. Again, that the amount that someone will have to pay is going to change during this process. As tax arrears are paid in full, the properties can be struck from the auction list. Additionally, a request must be sent to the registrar at Land Titles to have the notification removed. And you'll find this form on Service Alberta's website on the Land Titles Procedures Manual page. Also important to remember to ensure that you wait for payments to clear the bank before you remove the notification, so that you don't end up having to start the whole process over again if someone should happen to pay with a lovely NSF check, for instance. Also, it's a good idea to run your tax recovery list every month, and even more frequently when you get into March and around your sale date, so your file notification reconciliation information stays current. All right. Thanks, Lucienne. Now let's look at the timelines involved with proceeding to the public auction. So for this upcoming cycle, if the tax arrears remain unpaid by March 31st of 2024, then the municipality must, and I say must, not may, they must start preparations for a public auction. Our suggestion would be to develop a calendar starting with the proposed sale date and then work backwards to build in all the required notification and advertising timelines. Again, for the properties added to the list in 2024, the auction must be held between April 1st, 2025 and March 31st of 2026. Just a question about breaching the agreement. Do you wait for the next year in March to send the notification? And Lucien is correct when he says pick the process up right where you left off. And it depends, I guess, in the when that breach happened in your cycle. It may affect how you manage that with the tax sale. But thanks for the question. All right, so if the municipality doesn't conduct the auction within this 1-year window, an extension from the minister could be requested at a later date to conduct that auction. Information needed to make such a request is available in the tax recovery guide. Next, council is required to set the reserve bids and the conditions of sale by resolution. These conditions vary between municipalities, but some examples include cash only, maybe a certain percentage down and total payment by a certain date, or perhaps you could require builders to build on a vacant lot within so many years. And there's probably a lot of other examples that municipalities use for conditions. Again, it may be beneficial to have a policy in place to deal with these conditions so they remain consistent from year to year. What information does council need in order to set the reserve bids? So the assessor or an independent qualified appraiser should conduct market valuations on all the properties that are going for sale. This should be done as close to the sale date as possible in order to capture true market value. And why is this important? It's quite important so that some additional risk isn't added to the municipality that could result if a property is sold below market value. And if this happens, an owner could initiate a legal challenge, which could result in the courts ordering the municipality to pay the owner the difference between the actual market value and the price the property sold for at auction. Section 421 sets out the requirements for advertising a public auction. It's important to note that you can't use an advertising bylaw to modify these requirements in any way. You have to stick to exactly what's laid out in this section. So again, it's fairly prescriptive. So an ad has to appear in the Alberta Gazette not less than 40 days and not more than 90 days prior to the auction date. And you want to make sure to allow time for submission and publication, as the Gazette is only published twice a month. Also, make sure you give yourself more than the minimum 40 days to allow for any unforeseen circumstances. And the ad must also appear in a newspaper having general circulation in the municipality, not less than 10 days and not more than 20 days from the date of the auction. You must send a copy of the Gazette ad to the owner of the property and any parties that have an interest in it. So everyone that's listed on the certificate of title. And you have to do that not less than 4 weeks prior to the auction. This usually stimulates some payments. What if the registered owner is deceased? So we often get that type of question about what extra measures the municipality can take in order to find and notify the executor or the family members. But it's important to ensure you're dealing with the correct persons concerning the estate. Especially in small communities, municipal staff may have firsthand knowledge of the family members of a deceased owner. Again, you may want to consider a policy to deal with this in order to ensure all property owners are treated consistently, fairly, and in accordance with FOIP legislation. All right, so holding the auction. We'll look at this question in a minute here. We get a lot of questions about who can be the auctioneer for the public auction. So for taxes related to land in Division 8, there is no need to hire a certified or qualified auctioneer. So the CAO or another designated officer or staff member can typically conduct the auction. However, for DMHs and taxes not related to land in Divisions 8.1 and 9, we have become aware of a requirement to hire a qualified auctioneer. Not under the MGA, but under some different legislation, but I'll talk more about that in a little bit. So I'm not going to get into a whole lot of detail in this session about holding the auction, but there are a couple of things I'd like to mention quickly that I consider important. But before that, I'd like to note that there is no provision currently to hold a public auction virtually, and it must be held in person. So remember to start the auction by listing all the rules. So the method of bidding, acceptable forms of payment, conduct, what happens at the close of auction. So all those kind of details to make those known at the beginning. It's a good idea to have a procedure and even a script written up for this. And our manual has some additional information on this in the appendix near the end. So each property is introduced and it's important to provide full disclosure. So things like, is someone still living in the property? Is there some type of known contamination? Is it vacant but still full of the owner's personal possessions? This information could affect a potential buyer's decision, and making these details known could mitigate risk to the municipality. And then in terms of adjournment, sometimes there are good reasons for postponing or adjourning a scheduled auction. Maybe the arrears were paid the day before, but the check hasn't cleared the bank yet. Or maybe you missed getting the ad into the paper on time. Or maybe an estate is very close to being settled. So Section 422 allows an auction to be adjourned to within 2 months of the advertised date. The notice advising of the adjournment must show the new auction date. And that notice has to be posted in the municipal office typically. If the owners of all the properties on the list come in to pay their arrears, which is the ultimate and ideal situation, a notice would be posted canceling the auction. And last on this list is prohibited buying and bidding. And there are some restrictions on who can bid on or buy a property at an auction. And Section 429 restricts the auctioneer, municipal councillors, the chief administrative officer, and the employees of the municipality from bidding on or acting as an agent for someone else in buying the property. However, a designated officer or employee can be directed by council to bid on or buy a parcel of land for the municipality if it wishes to become the owner. All right, that's that slide. So now let's take a look at what must happen if someone buys a property. If it is sold at auction, The municipality will submit a transfer of title by submitting a notification of sale by public auction form and an affidavit of value form to land titles. The property is considered to be free and clear of all liens except for certain encumbrances listed in section 423 sub 1. And that things listed in that section include certain registered easements through land titles, any kind of CRA issues or liens, utility liens, that type of thing. These matters should have been disclosed before the property is auctioned so that there are no surprises for interested buyers. Section 427 sets out that all proceeds must be deposited into a separate account for each property sold. It also outlines the order in which costs and expenses get paid before any surplus is distributed to the previous owner. So first on the list is any remedial costs, then the tax arrears, then lawful municipal expenses such as legal fees, land titles fees, that type of thing. Then comes charges owing to the Crown under 553, things like unpaid utility charges or charges to extinguish a fire. And then finally, an administration fee of 5% of the amount paid. A separate account makes it easier to track all of the costs for whatever expenses need to be paid. And the municipality must notify the previous owner if there are surplus proceeds, and if the municipality is satisfied that there are no other debts, any surplus funds may be paid out. But if the municipality is not satisfied, or if there are any types of complexities with the file, then section 428 outlines the distribution of sale proceeds through the courts so that any person that feels they are entitled to part of the surplus money may apply for it using this provision. In this case, the municipality is required to hold those funds in trust for 10 years. But probably the more typical scenario is that the property doesn't sell at auction. So what options does the municipality have if no one was interested in buying that property? So the first one, the municipality can purchase the property outright. Perhaps it's a property that would benefit the municipality by owning it for whatever reason. So maybe the municipality has a specific use lined up for a property that can be beneficial to them in some way. So for example, maybe it's next to a municipal building and could be used as a parking lot. If the municipality buys it, the same rules apply as if it was sold to a private individual at the auction. So the title is transferred through land titles, a separate account is made for the proceeds and expenses, and any surplus must be paid to the previous owner. Another option is that the municipality may take title, retaining tax forfeiture clause at some time after the auction. And there's no real timelines in section 424 that give any type of deadline by when this action must be taken. So this makes the property tax exempt going forward if tax forfeiture is taken. So if that's registered on the title, the municipality must protect the previous owner's interest for up to 15 years. And once those 15 years have expired, the municipality becomes the owner free and clear. But during this time, the municipality may sell, grant a lease, license, or permit in respect of it, of that property. So they may sell it or grant a lease, license, or permit. So you could rent it out potentially. If the municipality sells or leases it, proceeds must still be deposited into a separate bank account. Some questions you may want to raise when the decision to take tax forfeiture title is being made. One of these is, what if someone's personal belongings remain on the property? What if renters or owners continue living on that property? And what are the implications of taking possession of the property? Does it involve changing the locks, for example? Does it involve getting insurance coverage or paying the utility bills? So those are a few of the considerations that could impact that decision. And the third option is to do nothing. So this option does not start that clock ticking for the 15 years as it does in option 2. The property will sit on the books as a liability, still accessible and still accumulating taxes. And why would a municipality want to do nothing? Perhaps there's environmental contamination, for example, or there could be a number of other reasons why that would be the preferred action. And you might be thinking that this slide is a bit skimpy on how a municipality determines which option would be the best course of action, but the reality is that there are unique circumstances associated with each property. Typically, it's best to have your legal counsel thoroughly review the file and provide their qualified opinion on what option would make the most sense for the municipality, and also mitigate any potential risk as much as possible. All right, so I did have some activities included in the handout. Pages 5 and 6 in your handout package has a bit of an little bit of an activity that you have to put the steps in the correct order. So that's something you might want to do kind of on your own, just to make sure you understand that the process. And these slides here are kind of a summary of those steps that I had just talked about. And I can send this information out afterwards if you're interested. You might want to just jot down the order and then that I have on the left-hand side of the screen here. And then try to put them in the right order a little bit later on. So these are the first 6 steps in the process, and then the remaining 5 after the auction. This is the correct order. I get not everyone's into activities, but it's up to each of you if you want to just try to get it into your own head. I know it helps me to kind of work through things to help my understanding. All right, so we're going to switch gears into the DMHs. If there's no questions about the first section I just covered. So we're going to see that the tax recovery process for DMHs is quite similar to the land taxes related to land. As first of all, as taxes that are more than 1 year in arrears must be put on the arrears list. Same for DMHs as for land. If your municipality chooses to use this method instead of the method in Division 9, which is the taxes not related to land, then the municipality needs to make 2 major policy decisions. So if you have mobile home parks in your municipality, this will be of interest to you, these two policy decisions that you can consider. So in Division 8.1, a DMH may also be added to the list if it is less than 1 year in arrears. So that's the first policy decision. So under section 436.03, the policy decision could be made, and the policy could outline the circumstances under which the municipality would take this action. So the action of making taxes for DMH's arrears for less than 1 year. So under this, if you have this policy, you'd want to consider when administration would add the properties to or the DMHs to the list, so that all homes are treated the same. So basically you'd want to make sure your policy is consistent from year to year and that everyone is treated the same. Like all DMH owners would be added after 1 year, unless you have a policy in place. If no such policy decision is made, then the default timeline is the same as the tax recovery related to land. So for more than 1 year. Another policy decision that can be made is whether the municipality wishes to make the mobile home community owner responsible for the taxes for all the DMHs within it. And the cost of the taxes would then be passed along to each DMH owner, most likely through increasing the lot rent. Some municipalities have found that this greatly improves their tax collection rates, even though it can be quite a controversial decision, especially from the perspective of the park owners. So the section that allows for that is section 304.1, sub J, sub 2. I thought I had that on the slide, but I guess I don't. So if you want to make a note of that, if that's something that's maybe going to be considered, it's section 304.1, sub J, sub 2. So under that section, council could pass a bylaw to put this policy in effect. And the bylaw requires advertising and can't be put into effect until at least a year after it has been passed. Another section in 304 sub 1 allows council to pass a bylaw saying DMH owners are responsible for the tax for DMHs located on a parcel of land. So those DMHs not in a mobile home community. So if there's just a private parcel that someone has pulled a DMH onto, so it's a different owner than the person that owns the DMH, then council could make the DMH owner responsible for that tax for that DMH instead of the landowner. I'm sure this is crystal clear. So besides that, those two policy decisions, tax recovery for DMHs is very similar to tax recovery related to land, but I'm going to focus on three primary differences. So those differences are how the municipality registers its interest in the DMH. Also, the advertising requirements are a bit different. And then the use of a licensed auctioneer is another main difference. Okay, so I'm going to get into those. So in this method, you will need to build an arrears list similar to what you do with land, but again, you need to first determine whether the property qualifies to be on the list. So that timeline slide, those timeline slides that I had showed apply to DMHs, unless you're making taxes, unless you're using the putting taxes in onto the list, or DMHs onto the list for less than 1 year of arrears. So prior to creating the arrears list for DMHs, the municipality must obtain serial numbers for each one. So your assessor should be able to provide that number, but a designated officer may also enter the property to get that. And if you can't obtain the serial number, there's contact information on this slide for the Modular Housing Association, Prairie Provinces, and they have the ability to assign a new serial number upon completion of the appropriate request form. So you'll need to give them the year, make, and the model as well. The municipality must fill out a financing statement for each DMH and file each statement with a registry agent to apply the tax recovery lien on the DMH. And some people refer to this as a statutory charge at the registry's office. And all these forms are available on Service Alberta's website. So this is what formally registers the municipality's interest in the DMH. So that's a bit different than registering the tax notification on the certificate of a title for a piece of land. Then our tax recovery guide includes much more detail on these forms and processes involved in registering these liens. And there's also a sample arrears list, as well as a step-by-step checklist in that guide. So that's something you might want to take a look at. Again, it would be a good idea to send a letter 4 to 6 weeks before developing the arrears list to the affected DMH owners, advising them that tax recovery proceedings will be started unless the tax arrears are paid. A copy of the arrears list for tax recovery related to DMHs must be posted in a place that is accessible to the general public during regular business hours, which again is generally the municipal office. Again, as the full payment of tax arrears are made, the properties may be struck from the list. And different from tax recovery related to land, this list doesn't get sent anywhere else. Once the tax recovery lien is registered, the municipality must send a letter to notify the owner that a lien has been placed on the DMH, a letter to the park owner, and a letter to each person who has an interest registered against the DMH by August 1st. So you'll be required to conduct a search of the personal property registry in order to determine if there are any other parties that have a registered interest in that DMH. There's also the provision for tax agreements when it comes to this division. So 436.09 is that provision. So it's very similar to the tax recovery related to land. And if the DMH is rented, again, the same process as in Division 8 for the municipality to be able to collect the rent. But notice of that must also be sent to the park owner. So if the tax arrears remain unpaid by the next March 31st, then the municipality must start preparations for a tax sale. Again, we suggest you build your calendar here and decide when you are going to have the sale. Remember, you can have that, have it between March 31st to April 1st. And you can also have auctions for both land and DMHs at the same time if you do a little bit of finagling of all the timelines that apply to both of those. You will need counsel to set the reserve bids and the conditions of sale after the auction date is set. So that same process that I talked about with tax recovery related to land. Here you don't need to advertise in the Gazette, but you do need to advertise in a paper not less than 10 days and not more than 30 days before the auction. So you're going to send a copy of the ad to the owner of the DMH, the park owner, and any interested parties not less than 4 weeks before the auction. And again, you'll need to do a registry search on the serial number to acquire this information. When it comes to holding the auction, it's pretty similar to tax recovery related to land, except for when it comes to DMHs, the Consumer Protection Act is not 100% crystal clear that a certified auctioneer is required. But our messaging would be to play it safe and to use a certified auctioneer for DMHs. This legislation also says that a certified auctioneer must be the one that does the advertising for auctions involving goods and DMHs. So this is something you may want to look into further and perhaps amend your policy or process. So again, things to remember when you're starting the auction, you want to make sure all the rules are laid out clearly. The method of bidding, acceptable payments, the conduct at the auction that's expected. Again, a good idea to have that procedure written up, and important to provide full disclosure, especially if there's people still living in there or there's any kind of problems with the property. Adjournment is also provided for in this division under 436.13, and you can adjourn to within 2 months after the advertised date. And I talked about that already a little bit. If you want to allow the check to clear, for example, you might want to adjourn. And the notice advising of the adjournment must show the new auction date. And then again, if everyone pays up, then notice is posted canceling the auction. Same rules apply for prohibited bidding and buying as for division, compared to Division 8. All right, so if the
Angela?
property, sorry, yeah.
What do you, this is a really good question, and it's one that we're getting more often. So I'm wondering if you could give some thoughts on it. For advertising, what if we don't have a newspaper that circulates anymore? It's only available online.
Right. Yeah. Thanks for pointing that out. We do get that question a lot. I think our messaging, I know it's not what people want to hear, but I think each municipality has to check with their legal counsel if they can rely on an online version of a newspaper. The Act is silent on that. Again, the Act is fairly prescriptive to have it in an actual paper. So yeah, it'd be best to check with legal counsel of each municipality if an online version would meet that requirement. Hopefully that helps. I know that's not the answer people like to hear, but bit of an interpretation involved in that. Okay, so continuing on, if the DMH is sold at auction, whoever buys it acquires it free of all security interests, liens, writs, charges, and other encumbrances, except those encumbrances arising from the Crown in right of Canada. So any type of CRA kind of issue would have to stay with that on that. It would be that encumbrance would not fall off. And if someone buys it, they're issued a bill of sale and the tax recovery lien is discharged and at the registry's office, and other claims that takes place using a financing change statement with a registry agent. And similar to lands, there's an order of priority of where the proceeds go and what gets paid out first. So the order of priority is the tax arrears first, any lawful expenses related to the tax recovery process next, and then the administrative fee of 5%. And again, the previous owner would be notified if there's anything left over. And the municipality can go ahead and pay that out if they are confident that there are no encumbrances that are left to deal with. But if they're not satisfied that they have all the encumbrances, they can have the owner apply to the court for the remainder within 5 years. And if no claim is made, then the municipality can use that money for its own purposes. So fairly similar to land, but you might want to just make sure you're aware of those provisions if you're dealing with DMHs. And a separate account is also required for each DMH on the auction list. And if the DMH doesn't sell, the municipality may dispose of it by selling it at a price as close as reasonably possible to the market value. And they can sell it various ways, including direct sale, sale by tender, or sale through a real estate agreement. Or if the municipality wants to use it for its own purposes, they can purchase it outright or grant a lease in respect of it. And then if in this situation, after 10 years, the municipality becomes the owner free and clear of encumbrances. All right. Just a couple of other things to mention with DMHs that you might want to be aware of. What if someone pulls up stakes and moves their DMH to another municipality in the dark of night? And we've heard of that happening once or twice. If the DMH is moved to or its site becomes part of another municipality, the receiving municipality must continue the tax recovery proceedings. The designated officer of the receiving municipality should ensure that a financing change statement is registered to list the new municipality as the secured party. The new municipality must continue with the proceedings, and if they receive sufficient funds, they must provide the original municipality with costs they incurred in connection with the tax recovery proceedings for the DMH. And that's covered in 436.22. And the other kind of additional thing here to mention a manufactured home community or a park must provide monthly reports to the CAO on the ownership of each DMH, including serial numbers for the units and in and out movement. And that's under 436.24. The frequency of these reports can be changed by bylaw, but this cannot be made more often than once a month. And I know that sometimes challenges municipalities to have folks comply with these requirements on this slide. All right, so another bit of a summary of the steps and the timelines here, just for your review to get everything kind of straight. And then that brings us to the final method, which is Division 9, tax recovery not related to land. So I'm going to provide more of a general overview of this method as it's less commonly used compared to the other two methods I just talked about. So I'm really going to provide more of, or highlight more of the differences, more so than get into the specific details of this process. Do we have a few folks at least out there that are interested in hearing about this method of tax recovery? If you want to indicate that in the chat as well, if that's something that you have a specific interest in hearing about, I'm going to cover it as well, but just to know that you folks have, or there's a few of you that at least that have some interest in it. All right, so I'll just, like I said, do a high level kind of an overview of it. So tax under this division is defined under section 437 as a business tax, well drilling tax, community aggregate payment levy, and those items identified in the multiple subsections in section 304 that are shown on this slide. This includes things like machinery and equipment, linear property, crown leases, improvements on non-assessed property, etc. So again, the process for this method is completely different compared to the other two. And this method is all about seizure of personal property and goods as opposed to the registering an interest in a parcel of land or a DMH. Personal property can include a wide range of items such as vehicles, office equipment, recreational vehicles, household goods, machinery, aircraft, etc. When using this method for tax recovery on a designated manufactured home, the municipality is still seizing goods, not the home itself. This process can be used to recover tax arrears in a much shorter timeline, less than 1 year. All right, so I mentioned earlier that the tax arrears are defined differently in this method, so a little bit more about this. And that's section 437. So under this section, arrears are defined as taxes that remain unpaid after the period of payment. So for tax imposed on linear property, machinery and equipment, or property referred to specifically in section 304 sub 1 sub F, the period of payment has been increased to 120 days. This was done through Bill 77 back in 2021, which you may have heard that was kind of a big deal. For all other types of property in Division 9, the period of payment is still 14 days following the tax notice mailing date for a resident of a municipality and 30 days for a non-resident. So it's important to note that the tax notice must indicate and allow for the correct period of payment before this method of tax recovery is used. Late penalties can be imposed no sooner than 30 days after the tax notice is sent out. So on the resource page at the end of the PowerPoint, I have a link to the Special Liens Guidebook that has a very thorough explanation of that process, plus some other options, if your municipality is seeking to recover tax arrears from oil and gas companies, which I know some of you, probably lots of you are. Those in the rural municipalities probably have heard from our ministry in terms of providing a list of companies that have outstanding arrears, so they can be compelled to pay up as a condition of getting new applications approved through the AER, or the Alberta Energy Regulator. So hopefully these processes are proving to be at least somewhat effective for you.
Angela,
Mm-hmm.
got a good question here. Which section of the MGA allows council to pass a bylaw to charge taxes for DMHs to the landowner? Do you remember which section?
Let's see. Okay, I will find that in a bit. Sorry. It's 304-ish. 304-1. So if you want to look
It's
at the
somewhere in
MGA.
304, but I'll find it.
Yeah, near the end of 304. All right. Continuing on. So there is no arrears list for Division 9, but there is still a public auction. The Section 438 outlines two ways to seize property, either by distress warrant or by way of any other act or common law right. However, the act only goes on to explain the distress warrant path. And the common law right may include collection agencies under the Civil Enforcement Act, for instance. So to start the process off, Section 439 allows for a distress warrant to seize goods belonging to the person liable to pay the taxes, which would be the assessed person. And to ensure you are clear on who the assessed person is for some of these more complicated situations where land is not involved, Section 304 includes a table to show the assessed person for each type of assessed property. A distress warrant is the formal authorization from the municipality to enforce the collection of the tax arrears through the seizure of personal property. Who can issue a distress warrant? A staff member can be appointed as a designated officer to prepare and issue the warrant and seize the goods, or a civil enforcement agency, sheriff, bailiff could also be used. And the distress warrant needs to include a whole list of relevant information regarding who is authorized to act on behalf of the municipality, the amount of debt to be satisfied, from whom the personal property is being seized, etc. So it must place sufficient goods under seizure to satisfy the claim shown on the warrant. This includes the value of enforcement and other legal costs, including civil enforcement costs. So for example, if a person owes $8,000 in tax arrears, if that person has a boat valued at $3,000, a stereo valued at $1,000, and a truck valued at $5,000, those items could be seized because their total value is equal to the person's tax arrears, more or less. So while not a requirement of the tax recovery process, it would be prudent for the municipality to have an independent appraiser determine the value of the goods at the time of the seizure. So you want to make sure you're seizing around the right amount and not a bunch more or a bunch less. That's where the appraiser would come in. All right, so the following goods may be seized under a distress warrant. So goods belonging to the person who is liable to pay the tax arrears, or in which that person has an interest. Goods of a business that is liable to pay business tax arrears, even if the goods have been sold to a purchaser of the business. And goods of a corporation that are in the hands of a receiver appointed for the benefit of creditors, an authorized trustee in bankruptcy, or a liquidator appointed under a winding up order. So yeah, there's a little bit more technicality stuff here involved in Division 9. And again, under this method, you cannot seize a DMH itself. You are meant to seize goods like, say, like a ATV or a vehicle or something like that. If the person who is responsible to pay the taxes is storing goods for someone else, the municipality must not seize those goods. Therefore, it's prudent to check on the ownership of the goods the municipality is seizing. It's also recommended to seek legal advice to ensure any requirements under other provincial and federal legislation are met. And another important note, you can't seize goods outside the municipal boundaries. They have to be within your boundaries in order to seize those, which complicates matters for folks. All right, then there's just a bit of more detail about the distress warrant. So the slide shows what has to be included. So there's a notice of seizure of personal property form, a notice of objection to seizure of personal property. So that's provided at the time that that seizure is being served. So to give the person a chance to object to that seizure. There's also something called a Bailey's undertaking. So if someone is in the possession of the seized goods, they might sign this undertaking as an agreement that they'll be kind of the caretaker of those goods that will be seized. So all these forms are found in the civil enforcement regulation. All right, some next steps. Any person may pay the arrears until the goods are sold at the public auction, and if those arrears are paid, the seized goods must be returned to the owner. The municipality may collect rent from any property owned to cover the business tax arrears. And I just want to highlight some important differences in this process as compared to the first two I talked about. So the first difference is advertising the auction. So advertisement must be posted not less than 10 days before the date of the auction in at least 3 public places in the municipality near the goods to be sold. So that's quite a bit different than the newspaper requirements and the Gazette. The ad must specify the date, time, and location of the auction, a description of the goods to be sold, and the name of the person whose goods are to be sold. And that ad will also include any conditions of sale that the municipality has established. And then the date of the auction. Unless the municipality has started another type of legal action under another act or common law right, the municipality must hold a public auction not more than 60 days after seizing the property. When it comes to adjournment, unlike the first two methods I talked about, Section 446 does not specify a length of time for which an auction can be adjourned. The municipality may adjourn the public auction by posting new auction notices, including all the new information in at least 3 public places in the municipality near the goods showing the date when the auction will occur. Adjournments are often put in place to extend the time so that the auction will fit within advertisement or notification requirements when those requirements are in danger of not being met. If payment is made shortly before an auction, the municipality should adjourn rather than cancel the auction to ensure that the check clears the bank. Always that important piece. And then when it comes to holding the auction, the municipality must hire an auctioneer to conduct the auction under this division. So under a Public Auctions Act regulation, goods taken in distress for the recovery of tax must be sold by a qualified auctioneer. Once the auctioneer declares the goods as sold, the sale is final and no further approval is required. So the municipality will want to maintain a record of sale activities for reporting to council. And that's not a requirement, but it's good to provide council with information in case a sale is challenged. And we'll look at if the property sells as compared to if it doesn't sell. So if it sells, it looks much like the other two tax recovery methods. A separate account must be made, expenses are paid in a specific order, and surplus proceeds must be paid to the previous owner. Again, a separate account must be established, and then the proceeds paid in order of priority. The tax arrears are paid first, And then any other lawful expenses incurred by the municipality in respect of the goods. So some examples of lawful costs might be the civil enforcement agency costs or fees, advertising costs, auctioneer fees, filing fees, legal costs, those types of things. And then distribution of the surplus sale proceeds. If there are any funds remaining, the municipality must notify the previous owner that there are surplus funds and that the owner may apply to the Court of King's Bench for the money. And this application may be made within 5 years after that auction took place. Section 448 states that the municipality becomes the owner of any goods offered for sale that don't sell at the public auction. They become the owner immediately. And the municipality may dispose of the goods by selling those goods at a later date. All right, and then I have a final kind of timeline summary for this Division 9 area. And then I had mentioned at the beginning, I had a blank chart in your activity package or your handout package that you could kind of summarize the differences between the three methods. So if anyone's interested in filling out their table just to help their understanding, I can send those out to folks later on, or you can give me a call to get these charts. I just think it's helpful to kind of compartmentalize the three different methods by looking at these different questions for each one. So that is all the material I had. If there's any other questions, we'd be happy to address them. At this point, we have a few minutes, I think, before 4. As I had said, here is our contact information. Our email address is changed a couple years ago. If you don't have this new address in your contacts, you could update that. And again, if you have any questions that you'd like to discuss with us later on, just give us a shout. Be happy to. Has there been an increase in tax recovery with our current economic times? Actually, I'm not sure if we can answer that question, to be honest. We certainly don't keep any statistics on that type of thing, so it's kind of hard for us to tell. Lucian, did you have any thoughts on that?
The only thing that came to my mind was that we do have our financial indicators, and if the rate of
Right.
collecting is under 90% for a municipality, then that shows up as a red item on that on the municipal indicators. But I don't know if anybody's done an analysis of whether there's more or less, if there have been an increase or decrease in the municipalities hitting in that red zone for tax collection. It may or may not indicate something in relation to the financial times we're in. That's the only thing that I could think of.
All right. Thanks, Lucian. And yes, we will be posting the recording of hopefully this session on our training page. That will be available for folks to view at their own leisure anytime they'd like. So I don't see any other questions. And if we haven't provided a satisfactory response to any of your questions, or if you want to phone to discuss anything further, you're just most welcome to give us a call anytime. Thank you for participating and providing your questions, and thanks for your attention. So I want to wish everybody a wonderful holiday season. Hope you stay warm and stay safe. And take care, everyone.